Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq-100 performance. We'll take a look at levels in the Vol Q, the tick index, as well as preview Adobe earnings. Shawn, it's great to see you as always. Let's take a look at your first chart here with fresh levels to watch on the Nasdaq-100.
Yeah, well, some of the levels that we had actually discussed in the weeks past, Joe, came into play this week, just when we were trying to get a feel for on this pullback, when should we expect some sort of stability or just somewhere where we can maybe consolidate a little bit here and try and regain our footing. But look at that level of 15,294. That was actually really the first one to be gapped straight down through. And we actually went down below that 15,140 level that we had actually highlighted weeks past as well. And that became resistance on the upside. The other level I thought was interesting was 15,007. That looks like it could be maybe a near-term support level to keep an eye on. And that's actually interesting because looking at the NASDAQ futures and just seeing what price we see a lot of those contracts exchange hands, the peak volume level where we see a lot of contracts changing hand for the Nasdaq 100 futures is actually just above that level, right about 15,047. On any renewed selling, maybe start looking at that 14,933, because we did get a little bit of over, I'd say the selling getting overdone on Monday, and that was where we really crashed through that level, but we were able to regain that back fairly quickly. And I think it was also worth noting on Monday, we actually saw what I think was a lot of institutional buyers coming back into the market. There was a significant imbalance to buy on the close on Monday, and that was why you saw some pretty big rips higher when it looked like rallies were just failing in and out of the day throughout the day until we got into sort of the ending of that session, when you see a lot of those market on close orders going through, and there was a significant amount of buying at that closing cross. And I think that to me is indicative of some strong selling pressure or buying pressure from institutions. I do think it's going to be interesting to see if maybe we can consolidate here and just reform some sort of a base. If we can, I think that could be a good first step and maybe starting to turn things around and going and regaining some of that lost ground that we gave back on Monday.
And Shawn, a couple of the other indicators that we take a look at, of course, are the Nasdaq Volatility Index, or what we call Vol Q, and then also the tick index. So what are you looking at there in those two items?
So looking at Vol Q, it's something we've actually talked about where I felt like maybe Vol Q being down at 14 or 15 seemed pretty low, just given all the uncertainty that was hanging out over the market. And I think it was just maybe the Evergrande issue was the straw that broke the camel's back. And all of a sudden, the Fed got priced in, the concerns over that, concerns over the debt ceiling, concerns over what's going on with the Delta variant. I think a lot of those just all got priced in at once the market really started to get a little bit risk averse. But looking right now at Vol Q, we sort of popped up into a new range for uncertainty or volatility. And that's right around here, I'd say up above that 21 level to anywhere in the 20 up to 23. So 21 to 23 is sort of the range I'm looking at. Once again, I think we popped significantly above that level, but that to me was when you were just seeing a lot of sell first, ask questions later, maybe some panic selling, some stop orders getting triggered, maybe a few liquidations intraday. But I think right now I'm watching that 21 to 23 level. Breaking back below 21 to me would be an indication that investors and traders are starting to feel a little bit more at ease with the market, and you can probably expect to maybe see some more follow-on buying, and that could be what maybe starts us to regain some of that ground. But I do think this is going to be an area that maybe we should expect to trade in for a few days, because volatility like this doesn't just disappear overnight. It usually leads to a little bit of choppiness and frothiness in the market in the following sessions.
And the ticks, what are you looking at there?
So for me, it was interesting. We're just trying to get a feel for is this without precedent? Where have we seen this before? And the tick index gives you an idea of, if you look at the Nasdaq-100 stocks, how many of them were trading lower versus higher. And the last time we saw this sort of breadth of just the number of names in the Nasdaq 100 trading lower was back earlier on this April. So if you want to look for maybe an example of maybe some selling that we had seen previously, you can maybe look back to that time period. I think it's worth noting that, yeah, maybe that seemed like a little bit of a jolt at the time, but we were able to actually regain our footing and continue to move higher. I think we might see something similar here play out, as long as you don't get another massive one-off event that sort of spooks markets here.
And Shawn, to wrap up here, of course, we have our Adobe preview, which is interesting. You don't typically see these larger tech names at this part of the cycle.
Yeah, and I think right now, for one thing that has really been interesting for me to see over this past earnings cycle has been these software services types of companies like Adobe, and it's been interesting to see their ability to go out and get new customers. I always say right now, the new capex isn't going out and buying a new machine or building a new plant. It's actually investing in your technology infrastructure, which is probably going to be a lot of those Nasdaq 100 type names. And we've seen just some incredible growth in terms of revenue, customers. They're bringing on larger customers. They're using subscription models, so you sort of have this annuity of revenue that's going to be coming in and out into the future. Adobe's doing a lot of interesting things. They're actually trying to get into e-commerce. There's a lot of what companies are doing just in terms of cloud, trying to get more efficiency going now that the workforce is more distributed. Digitally, people aren't doing things with hard paper anymore. A lot of it is getting PDFs. There's also a lot that they do in the e-commerce space just in terms of ad sales as well. So I think it's going to be interesting to see what we hear from Adobe. And I think the forecast is also going to be interesting as they are trying to move more and more into that e-commerce space.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.